And we're live. Traders, welcome back to the final episode in the system development series. This is where we give you a blueprint that you can follow, building a system from start to finish to help you be a consistently profitable trader in the long term. Now, before we get into the presentation, I'm going to introduce my guest speaker. As always, I'm joined by Cass from CDFX Trading. Cass?
What's up, everyone?
I think without further ado, let's get into the presentation. We're going to cover a few different things today. We're going to try and tie everything all together. I'm covering three things mainly. That's demo trading, live trading, and journaling. Now, journaling is something really interesting because I actually need to work on my journaling myself in my own trading. I'm still improving. I'm still on that journey to become a better trader, just like we all are. We're all at different stages. So I think I'm going to be learning along with you guys. So that being said, let's head into the first slide. And as always, it's a very simple and boring disclaimer. If you want to pause it, please feel free. It's nothing to write home about, nothing too interesting. Now, as always with trading, there is a certain level of risk involved. You have to be aware of that before you get into the markets. You can make money quickly in the markets, but also on the flip side, you can lose it just as quickly if you don't know what you're doing. So please bear that in mind. Neither me or Cass can be held legally responsible, if you will. But let's get into the education. I think Cass is going to take the reins quite a lot today because he is the resident expert on a lot of these things. But I'm going to chime in where I can, starting, of course, with a table of contents. Now, let's start with why demo trading. I think a bit of a spelling mistake there, but we'll keep it rolling. Why do we demo trade? Why do we get involved with demo trading? Well, we covered this in previous episodes. It's all about proof testing that system and making sure that it is viable to take it to the live stage before you put all your money down on the table. That's in very simple terms. I'm also going to discuss today how to approach demo trading. Now, we have covered some of these points in the previous episodes, but we're going to tie things together today and kind of glue it all together in a way that makes sense. As I said before, this whole series is about giving you a blueprint that you can follow, like for like. You're obviously going to have to put your own spin on it, but a blueprint you can follow to build that system. Now, third, we're going to cover today the big step, and what we all kind of look forward to as traders is going live. Bringing that system that you've demo traded and that you've tested meticulously and pushing it through to live, where you're actually trading with live capital. That's something we're going to cover today, and we're going to discuss a little bit about the differences that you need to sort of approach it in that sense, especially in terms of psychology. And lastly, trading journal. I think Cass has done another legendary spreadsheet for you today. He's put something together for you, and he's going to show you an actual example of a trading journal. So yeah, I'm really excited to get it started. And of course, we usually do a recap and preview, but unfortunately, guys, this is the very last episode of this series, so it's just a recap today. We're going to recap what we've learned today. We're going to go through all that sort of stuff. But without further ado, let's get into the first slide. Cass, I've been talking too much already. Why don't you take care of this one?
Yes, let's go. So why demo trading? That's usually a question I get asked quite a lot because a lot of people think demo trading is a waste of time. I don't really agree with it. I think it's important to start with demo trading, and the point of demo trading is to test your edge in the live market. So if you have been following this series for quite some time, you know that we started with concepts, and basically we've been building a system from zero to now when you really have a decent system that you have back tested or that you are still testing and that you have an edge in, and that's important. Now, backtesting defines if you had an edge in the past if you traded that system. Now we want to see if that edge is still there and if you are able to execute your system like you did in backtesting. So that's one of the reasons why demo trading is important, to test your edge in the live markets. I think a lot of people skip this because they think they can make money right away. But from experience, I know that there is a real difference between backtesting and demo trading, and you will make mistakes when you trade your system on demo. And there's no need to waste your money on those mistakes. You can easily make those mistakes in demo trading and basically learn from it before you waste your money in live trading. So that's one point why it's very important to start demo trading.
Sure. And actually, let me jump in before we get into the next line. I think a lot of people, in my experience, will backtest a system and they'll see something that's really good, something that's giving them 70% win rate or something like that, and it all falls flat when they go to the demo trading period. I don't mean to put anybody off. Of course, if you have something that's working 70% of the time backtesting historically, then that's a great start. But when we actually are actively managing our trades and when we're actually putting ourselves in a position, even at a demo trading level, there's so many more things going on in the markets you need to be aware of. Considering you've got to look at other currency pairs now potentially, also different variables, and even more so when you go to live trading, that's when the real psychology kicks in. So to have these things down to a T I think having it work on paper is one thing. Demo trading is a completely different beast, and live trading is completely different. So do bear that in mind. But you need to be able to identify that edge, carry it forward to the demo trading period, make sure you still got that edge, make sure it's still working in the way that you expect it to, and obviously then do you progress to the live trading phase. Let's move on. Cass, keep going. I think you're doing well.
Yeah, the second point is, are you able to execute your edge the same as when you backtested it? So this point is very crucial, and that's a question you really need to ask yourself when you are demo trading. Because the point of demo trading is to get the same results you got as with backtesting, and to get a feeling for the edge in live markets and noting down mistakes and issues. That's really the point of demo trading. And these are just a few small points, but that's very important to cover. And so are you able to execute it? Sometimes you backtest something and the statistics look absolutely amazing, but as soon as you go live with it and you want to trade it on the live markets, you notice that maybe some parts of your system aren't really able to be executed in the live markets. And that's really when you start to learn. And that's when you have to note down these things so that you can fix those issues before you go live. So that's the goal you want to keep in mind. If you are going live, you should have fixed all these issues, and you shouldn't go live before you have fixed it. Otherwise you will just lose money. So save yourself the money and the headache and really take this stage serious, even if it sounds boring, even if you think it's useless. From my experience, it's really a crucial stage to go through.
Sure. Let me just chime in very quickly. It's all about finding those mistakes and finding out potential problems within your system before you actually put money down. I think it's kind of like being a goalkeeper in football. You've got to really stop those goals coming in the back of the net. If you actually want to win this game, you have to make sure you're not setting yourself up for failure, in a sense that there might be something you overlooked within your backtesting that you didn't account for when you come to demo trading. So you've got to, of course, there is an indication. If there's something really good in backtesting, then you can be certain to a certain extent that it's going to perform somewhat well when it comes to demo trading. But we're trying to have that level of consistency within the markets, remember. That's kind of the aim of the game here. So we have to make sure that we're ironing out mistakes where we can, and making sure that we don't suffer those mistakes when we're actually trading with our own money, or trading with a funded account, more importantly. Right then.
On to the next slide.
How to approach demo trading. Cool. Let's have a look at the first line. Treat it as if you were trading live. I think this is really important. I think a lot of people go into the markets, especially when they're trading demo, with a completely wrong mentality. They kind of see it like, they don't take it very seriously. And I'm guilty of that myself. I think the first time I traded demo, one thing I got myself into the habit of doing was I would start a demo account, and back in my very early days as a trader, I'd have a system, I tested it, I backtested it, I'd start a demo account, and as soon as I took a loss on that trade, on the first trade I took, I'd just start the demo account again. I think, why wouldn't I? But that is completely against the spirit of what we're doing. And I know that we all want to see winning trades after winning trades, but you have to just open up a demo account, stick with it, choose the amount, choose the leverage, whatever you want to do with it, and just stick with that one account and test the system over that certain period of time. Because at the end of the day, you're only going to fool yourself. And if you progress to the live stage and you've given yourself a big head start with a massive winning trade to start off your account, because you've restarted your account 10 times like me, then you're kind of skewing the results in that way. So I guess you have to treat it very seriously. I would try and, I think, understand to yourself that it's never going to be perfectly the same as live, because you're not experiencing the same emotions, because it's not real money at the end of the day. But where you can, you have to emulate that as close to live as possible. And you have to treat it as if you are trading live, to every ability that you can. Because again, consistency is so key. And if you're doing a ridiculous risk management, because at the end of the day it's just pretend money, then when you obviously progress out to a live account, it's going to be a completely different story. So you have to treat it seriously. You have to treat it with respect, especially if your goal is long-term sustainability within your own trading. So, yeah. See, as the last test before going live, it's kind of like your last line of defense, if you will. If you pretend to yourself, if you're not treating it very seriously, if you have things that are not taken care of within your system in terms of risk management, and even if you've got a really good streaker in demo trading, you need to make sure you've got the sample size there to understand the long-term performance of this system. Now, I always recommend, at this stage, is always 3 to 6 months of demo testing religiously. Something where you're at the charts, every trading day if you can be, just like you would be if you're trading a live account. Again, I've covered a lot of the points already. It's all about just making it as close to live trading as possible, because although you can't account for everything, you can certainly make it more consistent in terms of your risk management, the discipline, the way that you enter and exit your trades. And then obviously when you progress to live, all you need to focus on is just handling the emotional side of things when it comes to handling actual live money. Let's keep it moving forward. Cass, please.
Yes. So I've written down a few points that you need to consider before going live. And number one is your results match with the backtested results. So if you have been trading demo and you've traded the same way as your backtesting, but you notice your results are way different than you did with backtesting, then you have to think about, all right, did I do my backtesting properly? Did I look at it too positive? Did I put in winning trades that weren't there? And that's really a point that a lot of people don't look at. They don't look at their backtested results and compare them to the results they got on demo trading. But to me, it is very crucial. And that way, again, you can save yourself a lot of money that you would be wasting if you just went live. So point number two is you have been profitable on demo for a few months. Like Christian just said, you should be trading demo for a few months consistently, using the same approach that you did with backtesting and treating it as live. And preferably you want to be profitable on demo before you go live. Point number three, you've learned from all the mistakes you made while trading demo. So like we said in previous slides, you are going to find issues with your trading. And it's important that you note them down and fix those as quickly as possible before going live. And then point number four, you have fixed all the issues regarding executing your ads in the live markets. And that comes back to certain concepts look good in backtesting. I've backtested a lot of systems that look really, really good, great statistics. But then if you want to execute it in the live markets, it's not possible for whatever reason. So that's also something you need to think about and fix before you go to that live stage.
I think it's about identifying that bias as well. And then there's certain tools you can put on your chart. I think that you showed us last time actually, where you can't see what's happened in the market before. And this is one thing you need to be taking into account, like especially when in the demo trading phase, you need to be very harsh on yourself. You need to really not give yourself reasons to not take a losing trade, or give yourself reasons to take a otherwise winning trade. Because when it comes to looking at the charts, if we could all look at the charts in a day's time, in an hour's time, we'd all be very rich people. We can see the tops and the bottoms quite easily, but actually trading it in real time, whether that's demo or live trading, is completely different, because you need to be able to pick out those entries on the fly and see them before they actually start appearing on the right hand side. So that's one thing to take care of as well. So make sure that you can execute your edge in the same way, consistently, in the same way that you did in your back testing as you do now on demo, then obviously onto live. Right then, next slide, let's keep it rolling. Going live, let's talk about going live a little bit. Now, we've already spoken about the psychological issues of trading live, but I want to really drill down on that now. Think about it like this, right? We really are brought up, at least I was certainly, and I'm sure a lot of people will agree with me in the comments, that we're brought up to think about losing stuff as always negative. You never want to lose your friends, you never want to lose your money. Losing is something that we really do find hard to accept often as humans. We want to be winners all of the time. Now, we can delve into that deeper level, but we'll spare that for today. But the thing is, losing will affect you. Losing will affect you in general, but especially when you're losing money. Now, one thing I want to advise you before we even start talk about the psychological issues surrounding live trading is making sure that you're actually setting yourself up to be in an emotionally stable state in the first place. We talk about a concept called scared money at 𝗶𝗶, and what that is trading with money that you can't afford to lose. If I've got my next rent payment in my trading account and I'm trading it to try and make it into 100,000, then we might have a problem there, because it means that if I don't actually succeed in my trading, I'm not going to pay rent this month. So it's about the emotional attachment you have to that money in your account, which I think is one of the many strengths of a platform like 𝗶𝗶, having the no loss liability, not being scared of losing, etc., etc. That's on the 𝗶𝗶 side of things. But before we even start talking about handling that emotion, you need to understand what is the context on which you're trading in. Like, are you trading from a point of desperation? Do you really need to make this money? Or are you looking to, make a skill or invest time in learning a skill that's going to benefit you for the next 10, 20 years? So that's kind of the first thing to understand. Why are you in the market? And if it's to make a quick buck, then you might have some problems psychologically handling emotion. Now, on a broader sense, in the emotional sense, going back to what I said about the whole losing theory, nobody likes to lose. I think that's fair to say. Everybody wants to win all the time. And I think we're expected to win all the time. But you look at any professional sportsman, most people, in fact, a lot of people, will suffer losses at certain times. You can't expect to win every single time. Now, it's how you handle those losses when they come, because they will come. That's the reality of being a trader. But as long as you're profitable in the long term, that's what's important. So I guess it's about looking at it with a positive mindset. It's about looking at it in a sense that you have to put yourself with the right grounding. And also, second point that Cass just brought up now is being aware of your issues, right? It's about identifying who you are as a person. Are you a really greedy type of person? Are you very fearful? Do you have a lot of patience, or are you very quick-tempered? That's understanding who you are. Me as a person, I don't have a lot of patience with a lot of different things in my life. I think I think a lot of people who are close to me can vouch for that. I don't have a lot of patience with people. I have a lot of patience with bits and bobs. So that's something I factor into my trading. Oddly enough, I do trade the higher time frames, and I guess being a trader has kind of helped me develop that. But as I say, you have to understand yourself as a person and understand your attributes, and obviously that goes back to what sort of trading you're going to really opt for. And if that's something you need to address, you're a very greedy person, it's funny because it will, of course, benefit you in a trading sense. But it's something that I've heard at 𝗶𝗶 a couple of times about. It's trading is also helping you develop as a character as well and develop as a person. If you learn to be less greedy through trading, maybe that'll help you in other aspects of your life as well. So you can look at it like that as well. So just to recap very quickly on what we've spoken about on this slide, understand the context of what you're trading for and what the motivation is. Of course, let's be honest, a lot of that is going to be money related. But are you trying to make 10 grand tomorrow or 10 grand over the next 20 years? That's completely different. Also identifying who you are as a person and how you handle emotions and your personality, and how you can fine-tune that to best align with your system when trading in the markets. Right?
Yeah, and to add to that point, to the second point, become aware of your issues and ask yourself why you have them. I see a lot of people complaining, I have FOMO, when I lose, I don't know what to do, but they never ask themselves why they have that issue. And the why is, in my opinion, the most important part, because that allows you to look at yourself, all right, I have FOMO, and that's because I really want to make money. I don't really know what I'm doing. And from that point, you can think about, all right, how do I get to know what I'm doing? How can I better approach trading and fix that FOMO? But if you don't know the why, it's really, really hard to fix those issues. And trust me, you will get those issues when you go live. Everyone has them. Even if you're a robot, I don't care. You will have those issues.
Right, and I think having emotions is part of being human. I mean, that's that you can't attach. I mean, of course you can adjust them. Of course you can, and that's kind of what part of what being a trader is, trying to limit the effect emotions have on the market. But I don't think, in my humble opinion, as a trader, I don't think you can ever fully remove them. So that's where the strength of your system will have to come in and help you kind of dictate the pace of your trading. But it's part of who we are as human beings, having emotions. That's why we have friendships with people. That's why we fall in love with other people. We're dictated by emotion. You need to remove that wherever possible within your trading. But where you can't remove that, you need to tweak your understanding of the markets and make sure your systems align with actually your personality in general. So, yeah. Track all your data in a journal. Okay, we're moving on to the journal side of things now. Cass, please. I'm here to learn as well. So take this one away.
This is a bit of an introduction to the next slide, but you want to track all your data in a journal, and I'm not just talking about trade data and those type of statistics, but also the psychological issues. And in a few slides, we're going to a template of a journal, and there you will notice that there's a section where we talk about feeling. How do you feel when you enter trade? Because I know, for example, that sometimes when I enter a trade, I'm like, I don't really like it. I feel a bit uncomfortable about it. But I know that my system tells me to be in a trade. And sometimes you can use your feelings to actually make better judgments. And I will talk about that again in the future slides. But really track all your data, not just trade related data, but also issues you face during a trade, how you feel about it. That's very important. And then also with journaling, it's always important to keep finding ways to improving. To keep improving. That's also what you want to do when you're live, because if you don't improve, your edge might eventually go away or get less profitable. So I think it keeps the game exciting. I think there's always something to learn, to test, to improve. And that's just part of the job. You can't just expect to build a system and keep that it keeps working for 10 years without doing anything. The odds are very slim. So keep finding ways to keep improving. That's very important as well.
All right, so I think it's, yeah, I thought so. Next slide. Okay. Cass, I said earlier on, Cass is more the expert with trading journals. I actually need to work on journaling myself. I do actually do it, but you know, it's part of my trading where I'm definitely lacking. So I think Cass is going to take it away, and we're learning something together today, the viewers and myself included. So Cass, please, let's hear about trading journals.
Yes. So in my opinion, having a trading journal is absolutely critical. Every professional I spoke to has some kind of journal, even if it's a program, an Excel sheet. Sometimes they write it all down in a notebook. It doesn't matter. You have to be able to look back at your performance and to see how you can improve, because a lot of people tell me, I know in my head what I did wrong. But no, you don't. You need to write it down, because otherwise you will think, it's not that bad. But if you actually know what you're doing wrong and you have the data that proves it, for example, if you know that you're missing trades because maybe you're away from home at the wrong times, or maybe you know that you trade impulsively, but you never take the time to fix it. But if you journal it and you can see, all right, I lose $2,000 a month because I'm not patient enough and I trade impulsive, then you have it black and white, and then it really confronts you with the fact that you're not patient enough. And that usually helps you to take the next steps to actually fix the problem and to save you money. So it's absolutely critical, in my opinion. If you don't have one already, stick around, because in the next sheet I'm going over the things you need to track to become better. Next point. It allows you to become aware of your strengths and weaknesses. And that's also very important, because like Christian said, he's not really that patient, but you need to know that about yourself, and you need to build a system around that, because everyone is different. I know from myself, I'm very, very patient. I don't care if I trade for a week or not, if there's no setup. That doesn't bother me at all. But if you're someone that wants to be trading all day, you need to know that about yourself. And having a journal helps you to get to know yourself, get to know your strengths, and then you can build onto your strengths, and you can basically eliminate your weaknesses if you do it correctly. So that's another reason why it's very, very important. And point number 3, focus on your strength, eliminate your weaknesses, like I just said, and not just with your personality, but also in your way of trading. For example, I know that Mondays are very good to me, and Tuesdays as well. I know that these days my trading performs the absolute best. So I don't sit around there like, I just treat it like any other day. No, I know that my odds are better at those days. So I increase my risk and build on those strengths. I know that on other days of the week, for example, Friday is my absolute worst day. So I'm not sitting there and doing the exact same thing every day. No, I decrease my risk on those days. And you can play with it and build other things around it. But if you're not journaling, you don't know what the strengths are of your strategy. You don't know what the strengths are of your personality. And you're basically just following a system without really taking the time to actually build on your strengths. And point number 4 is to make it a routine. So you now know why it's important and what it can do for you, but you really need to make it a routine. A lot of people tell me it's too boring to keep track of everything. Now, to me, it's absolutely critical, and you need to build a routine around it. So every time I take a trade, I fill it in my journal. I fill all the data in my journal every time I enter a trade. Every time a trade is closed, I fill it in again. And then in the weekends, I go over the journal and to see if everything is filled in. And then usually every quarter, I look at all the statistics and data in my journal to see if there are things to improve. But you have to make it a routine, and it doesn't take that much time. If you just take a trade, it maybe takes 2 minutes to fill in your journal after you enter the trade. It's absolutely nothing for the value you will be getting if you just do that consistently. So if you are going to get started with a journal, which I do recommend, make it a routine and just make sure you follow it.
Right. I'm learning a lot here, Cass. I appreciate that. I think trading journals is something that I need to work on. It's about, I think for me, it's about having that routine, because I think a lot of the time I actually do intend to have a trading journal, and I have one. but I just never really step it into my routine. It's never like part of my trading setup. It's, calculating my risk, calculating my stop loss, take profit, and then kind of move on with the trade. And I think having a trading journal would allow me to see things. I mean, one thing you mentioned to me, or that is really, really, really important, and something that is kind of an alternative way of looking at this is the fact that you mentioned at the very start that maybe you're sitting down at your charts the wrong time of the day. That's something, we talk about systems all the time. We talk about the parameters of your system. Your system can be killer, but maybe it works at a better time in the day. There's so many different variables here, and I think that's the nature of what this is all about. It's it's about identifying the variables that contribute to your long-term profitability, and actually that can be more things outside of your trading in terms of like, is your system going to work better on a Monday or a Tuesday? Is it working better or worse around news events? It's kind of like the periphery as well, and these things that you wouldn't ever pay any attention to in terms of when I'm actually sitting down at the charts each day. If I actually got out of bed and got to the charts for 7 a.m. every day, would I do better in the markets or this sort of stuff? And I think having all this stuff written down, you can keep track of all those variables and try and pair them together in a way that gives you the best long-term goal as a trader and long-term performance. And that's of course, what we're all about. So let's keep it moving.
All right, so we are going to take a look at a sample of a journal. Now, I do use Excel to journal, and I do use a program that you can buy. There are some programs out there that you can buy for journaling, which I'm not going to get into right now. This is the most basic way to get a journal, and I've divided it up into the basics, the entry and the exit data, and then some entry data with other factors, which I will get into. But it's very basic. You just start with trade. You call it number one, number two, just very basic. You fill in the date you enter a trade. And then you fill in the time you enter, just like we said in the previous slide. Sometimes you notice that during certain days you perform better. And if that's the case, you really want to have a big enough sample size. I've backtested my system over the past 10 years, and over the past 10 years, Tuesdays and Mondays have been the very, very best, and Fridays the worst. But if it's just for 2 or 3 weeks, of course, the data isn't reliable. But if you track this for a long enough time, then you will usually find some interesting things there. With time, this is really for day traders. If you are day trading, it's really interesting to track the time you enter and to see in which session this time falls. And sometimes you might notice that during London you make a lot of money, and then during the New York session you basically give it all back. I know a lot of people that do the same thing, and they just tell themselves, oh, I always lose the money in the New York session. But why then keep trading the New York session? Just write down in which session you perform best. See how much money you could save if you didn't trade during that session. And that's very valuable. Not losing money is also a profit. You have to remember that. So tracking the time, then tracking a buy or sell trade. And this usually is, and for my strategy, it does make a bit of a difference. But if you're trading indices, that's definitely very valuable to track because of the bullish skew there's usually in these indices. So you can basically track if buying setups perform better than selling setups. Next thing, the pair or the instrument or whatever you're trading, also very interesting to see because I know certain pairs definitely perform better for my strategy. But again, if you're not tracking it, you don't know it. Of course, when you have backtested, you already know this data, but it's good to keep in here and to basically compare it to your backtested data, but also you can compare the pair with, for example, certain dates or buy or sell setup, and then you can find other ways to improve. Next thing is your entry setup. If you only have one strategy, it will always be the same. I have multiple strategies, so it's important to highlight which setup it was, what do you call it? That's what you put here, and then you can divide in, all right, this setup works better than this setup. And then you can basically play with your risk. If you know that one setup is way better than the other one, why on earth would you be risking the same amount on both of these setups? It doesn't make any sense to me. I know a lot of people always tell you risk 2%. I don't know why they tell it, because if something is clearly performing better, just risk more on those things. There are professionals out there that really really stress this point. And also professional firms out there in Manhattan, there are some prop firms that really basically kick your ass if you don't risk more on setups that work better. So it's really important to know which setups are best for you, and then to look how can you make more money on those. Then the next points are the entry price, stop loss, and target price. It's very basic. And then the feeling when you enter a trade. That's also important. Yeah.
I think so. I'll jump in there, Cass. I think keeping track of your feeling is important too. I feel like all of this stuff is data, and data is obviously very important to what we do here as traders. But how are you feeling as well? How are you handling it emotionally? Because that's not something you can quantify with numbers, but having that record of it, I think I can see on your sheet already got feeling when you enter the trade and feeling when you exit the trade. Keeping track of those things as well. You know, if you're feeling very cautious, very scared that morning, you're not happy with the trade that you've taken, but it ends up being a profitable trade, a really good trade, then maybe you need to understand something about your trading psychology isn't quite right. So yeah, bear that in mind. And I think keeping track of something like a feeling is a good way of managing your trading psychology, and really, understanding that behind all this data is actually a human being trying to execute on this. So I think bearing that in mind is really, really good.
Yeah, so to dive a bit more into feeling, let's say you notice that every time or in most of your winning trades, you have noted down confident here. So in most of your winning trades, you're confident, but let's say you are hesitant and you notice that most of your losing trades are taken when you feel hesitant. Now that's something you can work on. And again, it's not really that quantifiable, but it does give you a sense of, all right, if I'm feeling confident in the setup, then the odds of winning are a bit higher. But this is something that really takes quite some time to get used to. So really get a big enough sample size and wait until you make adjustments based on this. But it can be a great guideline to improve your trading.
All right, let's keep it moving. Exit data, right.
Yes, let's go to the exit data. So of course, the exit price, the outcome in R, which is basically the risk reward. Let's say you risk 1 to make 1, you make 1 R. Let's say you risk 1 to make 2, you made 2 R, etc. That's what you want to note down here. This one is absolutely crucial to me, which is the outcome without management. And a lot of people manage their trades. I personally don't. But you really want to track the outcome with management. So with managing your trades, maybe you trail your stop, maybe you scale out. I don't know what you do, but you want to track the difference between not managing and managing. And why is that important? I know a lot of people that move the stop losses to break even and they think it makes them more money. But in reality, and from my experience, 90% of the cases, people lose money because they move to break even. If they didn't move to break even, price would have gotten to their targets and they would have made more money. But usually people do that because it feels safe and they don't want to lose. But if you track the difference between the outcome with management and without management, you usually find that if you don't manage a trade, you make more money and you even do less work. So that's also very nice. But if you're not tracking it, you will probably keep moving your stop loss to break even and it feels good, but you probably are losing, you're leaving money on the table. Same with trailing your stop. That could also really harm your performance. And it sounds good to trail your stop loss with price as you move in profit, but usually it doesn't end well. So that's something you want to track there. And then a few more points, the MAE and the MFE, which we spoke about with backtesting, which is basically, let's say you entered a buy trade, you want to track how far price went to your stop loss before hitting target. And the MFE means how far did price go up before taking your stop loss. So if you didn't put a take profit target in, how far did price move to the upside in terms of performance before hitting your stop loss. And knowing these two things, knowing the MAE can really help you to decrease your stop loss size or to make better entries. Because let's say you track the MAE in terms of R, which I usually do, or in percentage. Let's say every time you enter a trade and it wins, you have an MAE of 50. So you have a 50% drawdown towards your stop loss before hitting target. then you know either you should enter at a better place or your stop loss can be way smaller, which increases your risk reward, which increases your payout. So that's how you can use the MAE. The MFE is basically, let's say you always take profits at a 1-to-1, but you notice the price often goes further. You want to track how far it goes, and then you can maybe next time take profits at a higher target. Maybe you will trade a 1-to-2. But again, if you don't know the MFE, if you don't know the numbers, you cannot make these adjustments and you cannot improve there.
Now, a quick question I have before we move on to kind of the end of the spreadsheet.
Yeah.
The MFE, are you tracking that in a sense like how far did price move before it came back and hit my stop loss on that trade? Or are you looking at it as like how far did it go before it comes? When do you... I understand for the MAE, I understand that much.
Yeah.
Because you've been stopped out the trade, right? But in this, with the MFE, how do you gauge that? Where do you measure it from the point that it stopped, the trends turn the other way, or do you measure it back to when it hit your entry or your stop loss? Where do you say like how many pips you left on the table with that?
Yeah, so let me draw it in quickly. Quick example. Let's say you enter at the blue line and your stop, it's a buy trade, and your stop goes at the red line. You basically want to track this entire movement. So you don't want to track the target, but you want to track the entire movement before your stop loss is hit. And sometimes it takes a year. Now, I don't know how long it takes, but you really want to track this entire move, because this was the maximum potential you could have gotten out of the trade. And if you know that from every single trade, then you can make adjustments and see if maybe your target you should be bigger, or maybe you should manage your trades to get the maximum out of that move. So you want to track how far price went to the upside in case of a buy trade before taking out your original stop loss.
Sure, I guess it's about going back to your journaling and looking at it again as and when those trades would have hit those stop losses. So that's
exactly. You can't usually fill it in as soon as the trade exits, but you have to get back to it maybe a week later or so to fill it in.
Sure, especially if you're trading on those lower time frames, it shouldn't be too much waiting on that one. So cool. All right, let's keep things moving with the spreadsheet.
Yeah, of course. So last thing in the exit data is, of course, the feeling. How did you feel when you exited a trade? I know that I don't have it when I exit a trade, but I know if I miss a setup that I should have been in, I really get upset sometimes. And that's something I want to note down, because that tells me, all right, I need to fix it. Same with exit trades. Sometimes a target is hit, but you feel like maybe you left some profits on the table. You feel a bit uncomfortable. Write it down, and maybe you can find something there that can increase your performance. So the next thing is really strategy specific usually, and this is about confluence factors, and this is where you basically test some new ideas. So I've written down a few ideas you could test, which is great. I like to grade my trades when I enter them, and it will be either grade A or grade B. Grade A is when the price action just looks good, structure is right. I use liquidity concepts, so I like to see a clear absorption of liquidity. That's what I call a grade A trade. A grade B trade is where these things aren't really clear. A grade B trade is where maybe I feel a certain way, or it can be anything, but you really want to write it down and then divide it into grade A and grade B. And then if you have filled in your journal maybe 20, 30 trades, then you can see, all right, my grade A trades perform way, way better. For example, I know if a setup is grade A for me, my win rate increases by around 10 to 15%, which is quite a lot. But again, if you're not tracking it, you don't know that. Next thing is, the next thing is certain price action. Sometimes there is price action that increases the odds of success, and again, it's up to your strategy, but that's also something you want to track. Maybe you want to track certain fundamentals. Maybe if you're buying something, you want it to be in line with the interest rate of a certain country or the differential between two currencies. Again, up to you, but this is where you really want to track confluence factors with the aim to increase your performance.
Sure, I can understand that a bit. Fundamentals is pretty straightforward. And this last bit, print screen, this is just a screenshot of your trades before and after, right?
Yeah, I trade the daily and the hourly. So when I enter a trade, I put in a print screen from when I enter on the daily and the hourly, and then when it closes, I put a print screen in the day on the daily and the hourly again from afterwards. And then if you, like I do, I basically look at my journal every quarter to see if I can improve something. And you can also look at your print screens to see if there's something that connects your winning trades. Maybe there's a certain type of price action that usually happens when you win. And that's why print screens are very important. Yep.
Sure. I think having that visualization, excuse me, is really, really helpful, I think, to see actually what it looks like on the chart, because it's not, without a screenshot, it's next to impossible to kind of represent that within a journal. But that was a great little session there, Cass. I've learned a lot. You obviously go into a lot of detail with this. I can see that.
Yeah.
All right.
There's a lot more to it, but this is really the basics, and just tracking this data and some confluence factors, that's usually enough to really improve your trading. So yeah.
I think it's about collecting data, and the more data you have, the more you're able to fine tune your system to be better performing in the long term. But I guess just before, just without repeating myself too much, please make sure that when you get to this stage of back demo testing and live testing, you've actually got a system that actually is worth something to start with. It's actually going to perform well in the first place. So yeah, let's head back to the presentation. I think we're going to wrap things up. Let's go to the next slide. Let's keep it moving. Recap. It's usually recap and preview, but as I mentioned earlier, it's the last episode today. So it's been a pleasure. It's been emotional. I'm not sure what the future for me and Cass is. I mean, I think me and Cass are working quite well together. I'm sure there might be some more content on the way. It's a conversation I need to have with him, but it's been a pleasure to have him on the show here. And yeah, it's a bit of an emotional one. But let's recap the episode a little bit. Follow the process we spoke about during this entire series. We really have tried the very best we can to kind of give you a blueprint and a kind of path you can follow from A all the way to Z in terms of how you can build a system by yourself and actually put that out into the trading world and the steps that you can take to go from 0 to 100. Now, we have tried our best to kind of highlight that to you and obviously factor in your certain personal concepts that you want to learn and your emotions as a trader and your person. You have to obviously adjust this process a little bit to yourself in terms of what you want to learn in a unique sense. But follow this process from start to finish, and I can promise you, even if you follow this process and you just give it a go and you try it, I can promise you, if you have a system at all, then you're going to be much further ahead than people who just trade by feel. So let's keep things moving. Let's go to the next line. If you found your edge, then of course, you know what it is. Cass wrote that himself, by the way. I'm really impressed. Become funded by 𝗹𝗶 and trade more capital. Of course, we put the series together with 𝗹𝗶. We're here on the 𝗹𝗶 YouTube channel. Cass has been very kind to join me and kind of be my co-host for this. But when you reach that stage, if you get to the end of this process and you're ready to actually get live capital and live funding and grow your account, a lot of people have a system that's really, really profitable, but they just don't have the capital to trade. And that's kind of the traders we're looking for at 𝗹𝗶. People who have put the time in, put the effort in to learn this, and put the hard work in, ready to trade, just like that capital. We do funded accounts, instantly funded accounts of 50k minimum for our pro account, 25k for our light account. And obviously with a pro account, you can grow that account all the way to 1 million, and you can make some serious money when you do that. But people who follow this process, a process that is difficult, a process that's involved, a process that requires a lot of hard work and time, they're the traders that we're looking for at 𝗹𝗶. People who actually, know how to trade, and they are ready to execute, but they just lack that capital. So yeah, let's keep things moving. Thank you for that one, Cass. I appreciate you doing my work for me. Let's keep this one moving. Is there anything else to cover on this slide, or is it the next slide after this?
Yeah, this is basically the end of the presentation. This is the recap. Yeah,
it's the end of the series as well. Cass, it's been an absolute pleasure to have you join me on the show. I can only hope we'll do some more stuff like this in the future. Any further suggestions for anything else you want to see? Any trading concepts? Maybe want me and Cass to talk about candlestick patterns. Maybe want me and Cass to talk about something that we don't know a lot about. So we'll have to go away and research and present our findings to you. If you have any suggestions or anything you'd like to learn for a complete series, for an episode, I need to get the okay from Cass, but we'll see what I'll put together. I'll try and put his arm to join me again. It's been a pleasure. Now, before I let Cass say his final goodbyes, I will say that Cass's channel is in the top link in the description. He's got a lot of educational content over there. I went to his channel the other day. He did some really cool stuff on the wick off. That's something that I learned as well. I learned a completely new trading concept. It's pretty concise stuff, very educational stuff. Check out the first link in the description to go to his channel. There's also a link in the description to get instant funding of 50k. We spoke about that already. That's in the description. All of our socials. Go and follow us, like us, subscribe to us, whatever the case may be. Cass, please, your final words for the episode.
I really enjoyed making this series, and I really hope a lot of people learn something from it. We've gotten a lot of positive feedback, and if you really enjoyed it, leave a comment down below. And other than that, yeah, I really hope we can work something out in the future, maybe another series like you said. And yeah, hope you guys,
time will tell.
I wish you guys the best. Yeah.
Well, again, really appreciate you joining me for today and this entire series, Cass. And without further ado, we'll catch you guys if there is a next one. See you later.